If you are a stock investor and you want to maximize what you have, one of the things that you can do is every time you make money from dividends is you reinvest it. You make that base bigger by just reinvesting your dividends as well, and that's when you start experiencing compounding growth in the stock market, and that's what makes it good over the long term as well. Hey guys, so we've seen a lot of stock market drops over the past few years, and we've seen really large downward movements, particularly also whenever there's fear, uncertainty, and doubt, or there's bad news, or similar to what happened during the entire COVID/lockdown scenario. We've seen so many things happen that has brought a lot of people to actually sell as well, and which has also brought a lot of people to stay away from the markets. In this video, I want to give you 10 good reasons that if you're a long-term investor, the stock market is still one of the best places for you to be able to park your money as a store of value, and something that has the ability also to grow what you have over a stretched period of time. Number one, potential growth. Over the long term, stocks has historically outperformed other investments such as bonds and cash in terms of potential growth. And you can see it even if you're investing in the S&P 500 versus bonds, S&P 500 versus just putting it and leaving it in cash. Investing in the stock market has done really well. And that's the S&P 500 alone. But what if you invested in game-changing companies like Apple or Google or Microsoft or Tesla? Then the gains get even bigger. Or if you invested in stocks that give good dividends, like what Warren Buffett has been doing with Coca-Cola as well. Number two is this: 10 reasons why the stock market is good is when you diversify, it allows you to reduce the risk of investing in any single stock or sector, and it protects your portfolio also as a whole. Number three, it's an inflation hedge. Historically, stocks have provided a hedge against inflation as the earnings of the companies rise, typically with inflation. And I want to say this, if you look at it from this perspective, why do stock prices go up? Because it's also connected to its sales, it's connected to its earnings. Why do sales also go up? Because companies raise their prices, and they raise their prices in conjunction to how inflation is. And that's why it becomes a hedge against inflation, because as the earnings go higher, the PE goes lower. It becomes more attractive for people to buy the stock again, and again, it goes back to supply and demand. More people buying it, it would bring the prices higher, and a low PE brought about by higher earnings will push the prices higher as well, and that's why it's an inflation hedge. Number four, compound growth. Stocks can benefit from compound growth as the reinvestment of dividends can generate additional returns over the long term. And I think that's what makes it interesting, and that's what I also submit to all of you. If you are a stock investor and you want to maximize what you have, one of the things that you can do is every time you make money from dividends is you reinvest it. You make that base bigger by just reinvesting your dividends as well, and that's when you start experiencing compounding growth in the stock market, and that's what makes it good over the long term as well. The stock market is very liquid. The stock market is a highly liquid investment, making it easier to buy, but not just buy, it's easy to get out of your position. That you don't have to wait for a liquidity event, you don't have to wait for an IPO, you don't have to wait for people to buy it from you. You don't also have to go through so much paperwork just for the transactions to take place. Number six, highly connected to compounding growth is its potential for dividends. Many stocks pay dividends. It gives you a passive source of income. It gives you the ability to have cash flow for life. And as you all know, the name of the game is to have as much passive sources of income that you don't have to watch your stocks every day, but receive revenue, receive the ability to be able to earn from it as well. Number seven, it's not just the potential for dividends, but it's also the potential for capital appreciation. Stocks can increase their value over time, providing potential capital appreciation, especially if you look at the index, form a basket of companies that you know have a historical track record already of growth, you know will withstand any economic crisis as well. And you know also, if you're looking at the index, there's no company that's currently in the index that would be there if they're going to be bankrupt soon. Or also, in a way, if you're going to spend more time also to study, then it's worth looking at companies that will be here for the next 10, 20 years, either because they're very durable, their product or service is something that's needed, or they're creating something that's game-changing, that will change the way we see how life would be also because of the products and services that they're actually building. Number 8 is ownership. Investing in stocks can give you a stake in ownership of underlying companies, providing a potential share of the company's profits. Number 9 is professional management. And I think that's one of the things that make the stock market very interesting, is that many publicly traded companies are professionally managed, which can lead to more efficient decision making and better performance. Since they're professionally managed, you know that there are people that are better and smarter than you running the companies, and we know because it's professionally managed that the company has a bigger shot to be there 5, 10, 15, 20 years as compared to a startup, as compared to a family business, as compared to you just running something on your own if you don't especially know what you're actually doing. And that's what makes it sustainable over the long term, because there are professional managers, professional executives that are running the company, and they are at the helm of it all. Number 10 is this: long-term focus. Companies listed in the stock exchange can often focus on long-term growth, success, rather than short-term gains as well. And I think that's what's gonna make it also sustainable. When they have a large amount of money that they can also weather different storms, but not just that, they can also position not just for earnings for the short term, but they can also position for where they plan to be in the next 5 to 10 years as well. And what's nice about that is everything's also transparent, similar to it being professionally managed. You get to see it, you get to have a peek of their cash, you get to have a peek of their earnings, you get to have a peek of everything else in between that will make the company more sustainable. I like companies that look at how they will perform over the next years, and that they're not just trying to look at the stock price, they're not just trying to appease shareholders, but they're looking for the overall growth of the business, because the business owners or the CEOs take care of the business first. The profits will follow, and when the profits will follow, the stock price also would follow as well. There are risks attached to when you invest in the stock market, and you have to consider those risks as well. However, the numbers have shown it that over and over, up against other more conservative investments, that the stock market is one of the best investments that have been there traditionally, and we've seen it do well up against other asset classes as well. And I've been in the stock market for over 15 years now, and I think, at least from a personal standpoint, it's something that I think is very interesting, especially if you're the type of person that don't want to be entrepreneurial. It's basically you letting your money work hard for you, betting and investing in other companies that are professionally run, and you believe that they will do a better job in that particular sector, or in sectors and industries that you don't have exposure as well. Or you can actually start on your own. We can't start our own energy company, we can't start our own water company, we can't also beat the largest brands in the world like Starbucks or McDonald's or KFC. If you can't beat them, join them. What makes the stock market really good is leverage. What makes the stock market really good is the ability to partner and be part of companies that have been there over a very, very long period of time. Do you guys think the stock market is good? Put it down below. If you guys have any questions, put it down below as well. I'll try to make videos off of that. If you want to know more about the stock market, I've written 5 books about it, and we have details about it in the description below. And if you want to know more about how you can trade effectively and invest effectively, I've written 5 books. I have seminars on it that you can also enroll, and if not, you can also watch the thousands of videos that I have here in YouTube as well. That's it for now. Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you.